Welcome to today's webinar. I'm Jimmy Atkinson, the host of the Opportunity Zones podcast, founder of the Opportunity Zones database at opportunitydb.com, and also co-founder of OZ Pros at ozpros.com. And welcome to today's webinar, COVIDs and Opportunity Zones. We'll get to the panel shortly, but first I would like to introduce Egils Milbergs, co-founder of OZ Accelerator and CEO of the Center for Accelerating Innovation and the mastermind behind today's webinar. So Egils, please take it away.
Thank you, Jimmy. Thanks for taking on the moderation role. I want to say a good morning to people on the West Coast and a good afternoon on the East Coast. This is a very important event from our standpoint, and glad to host it. A crisis is a unique opportunity to change the path of a nation, community, family, individual, or an opportunity zone. We're in the midst of a COVID-19 word cloud, quarantine, social distancing, PPE, N95, masks, $600 a week, stimulus, community spread, eviction, lockdown, flattening the curve, spike, virtual work, hybrid education, vaccine trials, masks, and so on. The question for today is how opportunity zones will respond to this context. They have been devastated with unemployment, school shutdowns, and a financial freefall. For many residents of Oz communities, a sense of despair, fear, anxiety, frustration. The impact has been hard on the African American community especially. Opportunity zones have the potential to create a more optimistic and more hopeful outlook, a once-in-a-lifetime moment to change the course through investments in innovative solutions. The billions that are being committed to opportunity funds can offer capital, empowerment, and community impact, help build national recovery and resilience. And for sure, this is a very multidimensional and extremely complex challenge. We're fortunate today to have a panel of expertise and experience so we can learn, give us insights, hopefully guidance on what can be done. We cannot wait on a magical recovery. We must leverage the uncertainty for innovation. Opportunity zones need to act, not be acted upon. This is the mission of the Oz Accelerator, which is proud to be the organizer and host of this event. Also grateful to the collaboration with Bob Berga of ASTRA and our moderator, Jimmy. And Senator Tim Scott, an author of the Opportunity Zone legislation, he has graciously prepared some remarks to kick off our conversation today. Senator Scott, thanks for your leadership.
Hey, Senator Tim Scott here. Thank you for giving me an opportunity to talk about one of my favorite subjects, opportunity zones, and they continue to take off. Amazingly so, through this pandemic, while there's been some consternation around how do we get our economic activity moving again, one of the easiest ways to do that is through opportunity zones. Why do I say that? Simple. Because today, more than $75 billion have been identified for opportunity zones. More than $10 billion of capital has been vetted and sent out, deployed in opportunity zones. What does that mean? That means that long term, we will see a recovery unlike what we saw in 2008. That is good news. Opportunity zones will ensure an amazing recovery without any question, a better recovery than we would have had without it. If you think about opportunity zones also, what you'll realize is because of the pandemic, we've seen a relaxing of some of the reporting requirements in opportunity zones. That's good news. It takes some of the pressure off of meeting those deadlines that were based on a pre-pandemic America. And so because of the pandemic, lots of changes to the reporting requirements and the investment requirements. Take a closer look. If you need more information, feel free to give us a call. Phase 4 includes, phase 4, said differently, in the coronavirus response package. We call it CARES 2.0 or phase 4. It includes a new $100 billion loan program for our hardest hit small businesses, which has an estimated 65% overlap with opportunity zones in terms of geographic requirements. This is great news. Senator Marco Rubio, the chairman of the Small Business Committee, talked about the importance of this new small business loan program that would be extended for a 20-year loan at 1% for the most devastated areas of our country and the hardest hit businesses. We are looking forward to seeing greatness arise like the phoenix from the global pandemic. Thanks so much.
Okay, thank you, Egils, and thank you to Senator Scott for providing that pre-recorded video for our group today. I'm going to quickly introduce each of today's panelists now, and I'll give each one of you, the panelists, a quick chance to say hello. Don't dive into your discussion points just yet. If you could just limit it to about 30 seconds, maybe tell us a little bit more about you and your organization. Actually, before I do that, real quick, I do want to just announce to all of our attendees here in the audience today that we are going to leave some time for Q&A at the end of today's session. So if you do have a question for either Egils or me or any of our other panelists who are on hand today, they're experts in the Opportunity Zone space. Please don't miss out on this opportunity to ask them some questions. You can do so by using the Q&A tool in your Zoom toolbar. If you hover over the bottom of the screen, depending on which platform you're using, you should find a Q&A tool. Please use that. We also have a chat feature for today's webinar, and we can use that to chat informally amongst ourselves, but it'll be a lot easier for Egils and I to moderate the questions if you can use the Q&A tool. So let's quickly run through each of today's panelists today. Brett Theodos will be our first panelist. He's a senior fellow at the Urban Institute. I recently had him on my podcast a week or two ago. Brett, can you say hello, please?
Hi, everyone. So good to be with you. Happy to talk about OZs. I study community development finance at the Urban Institute, which is a nonprofit research group based in DC.
Fantastic. Thanks for joining us today, Brett. Our second panelist will be Emily Lavery. She's a legislative assistant for Senator Tim Scott. Emily, please say hello.
Yeah, hey everyone. Thank you so much for having me on today. It's always great when I can get some time out of my day to talk about Opportunity Zones, Senator Scott's keystone legislation. So thank you guys again for having me.
Fantastic. Our third panelist today will be Jim Sorenson. He's an impact investing pioneer, chairman of the Sorenson Impact Foundation, and managing partner at Catalyst OZ Funds. I don't believe he's logged into the Zoom session today. Egils, do you see him here?
No, I'm wondering if he had the panelist link.
We'll try to sort that out. I'll make sure he gets that, and we'll try to get him in here as soon as we can. We'll save him for the end if we have to, but he's fantastic, and I do hope he's able to join us. Okay, I am getting a text that Jim is here, so we will hear from him very shortly. I'll be sure to get that panelist invite link to him so he can log in as a panelist. Dustin Lester will be our next panelist. He's the Vice President of Consulting for Community Insights at Emsi. Dustin, please say hello.
Hello, thank you everybody. Really appreciate the opportunity to talk about Opportunity Zones. I've done a lot of work with Opportunity Zone research, analysis, and communities. I come from an economic development background, both as a practitioner and a consultant, so really appreciate the opportunity to talk to you all today. Thank you.
All right, thank you, Dustin. Catherine Lyons is joining us from the Economic Innovation Group. She's the manager of policy and coalitions there. Catherine, could you please say hello?
Hi, yes, thanks so much for having me. I'm Catherine with Economic Innovation Group. We are a nonprofit bipartisan research and advocacy organization based in Washington, D.C. And we were essentially the architects of the Opportunity Zones concept, working obviously very closely with Senator Scott and Booker and our House champions as well to turn that into legislation, and have been very active on the implementation of the incentives since its passage.
Fantastic. And then finally, last but not least, we have Robert Scott joining us today from SBA. Robert, can you please say hello?
Hi, Rob Scott, Regional Administrator for the U.S. Small Business Administration in the Great Lakes region.
Fantastic. Thanks, Robert. We're looking forward to hearing from you. So we do have Jim here. I'm going to get that sorted out while Brett kicks us off with his prepared remarks. Brett Theodos, you're our first panelist today, Senior Fellow at the Urban Institute and a recent guest on my Opportunity Zones podcast. Recently, he was the lead author on a research report titled An Early Assessment of Opportunity Zones for Equitable Development Projects. I know you have quite a bit of information to share and insight from your perspective, Brett, so please take it away.
Great, thanks so much. And again, great to be with you. So I'm not going to go into too many of the findings from our report. I'm going to dwell on some of the questions motivating this webinar. In particular, the impact of COVID-19 on OZ projects, investors, and funding. As I see it, as I observe the world and have conversations and look at data, the effects are serious, and they are, of course, locally contextualized. And so we have a lot of different markets. I mean, that's one of the realities of OZs to begin with. We have areas that have, zones that have a median home value of $2 million, and we have zones that have a median home value of $14,000. So we really have quite a divergence and diversity among the zones. And so certainly how they're experiencing COVID also has some diversity. But we are in a much more challenging environment than we were. So just in DC, for example, we have record level commercial office vacancies north of 15%. And that was a dynamic that predated COVID, but for which COVID is certainly making things worse. And to the question of whether OZs can recover, I would say as a program as a whole, yes, definitively. To me, a more nuanced question is then, how about the zones themselves? And I think there the answer lies more in the realm of yes, for some, and for other zones, not anytime soon. And all of this, of course, depends on the timeline for a vaccine and returning to something closer to normal. So when we think about new opportunities for investment generated by COVID, is there silver lining? Is COVID going to disrupt things in a good way? Are we going to produce some benefit from all of this sacrifice? And I struggle to see that many upsides. I'm sure there will be some, but at least in terms of the investment market, at the moment, we're not actually seeing big price drops. So we're not seeing people able to, repurpose and be able to retrofit and rethink a new economy locally. Mostly people are still kind of holding on and hoping we get back to normal pretty soon. So, whereas the 08-09 crisis, we certainly saw a lot of decreasing land values, property values that allowed for some reinvestment with time, though obviously a lot of consequence as well. We haven't observed that yet. We have seen some fire sales. We've seen some projects, move ahead at lower prices than they would have otherwise, but we haven't seen kind of a wholesale correction yet to property values. But the longer this goes on, the more that may well be coming, especially with rents. And I think part of the answer, and this does draw from our research findings, that it informs my take on how OZs are faring in a time of COVID, is to remember that OZs are often a small part of a project's capital stack. So they could be 5% or 3% or maybe 10%. Sometimes they're more, but often they're a small part of a project's capital stack. And so the subsidy delivered through the Opportunity Zone incentive itself is relatively shallow, at least especially when we're talking about the temporary deferral and the basis step up. And so that means we're swapping out, hopefully, what is a lower price equity for other equity. But it means, often, as we have seen in our research, is that a lot of project sponsors and investors, the majority of which we spoke with, though not all, to be clear, reported that the OZ projects they were engaging in would have gone ahead in the same timeline, in the same form, even if the incentive wasn't available. And that in part reflects the relatively shallow nature of the subsidy, at least the upfront parts. So if OZs are a relatively small part and they're relatively substitutable for other forms of equity, on the whole, again, lots of examples individually where that's not the case, but on the whole, then we would expect the broader dynamics in the commercial real estate market and in the multifamily market, for which are the biggest uses so far of OZs, to really be the trend for OZs as well. OZs are going to rise and fall with those markets. And so to the extent that those markets are slowed down, which they are, then OZs will be too. So some deals are getting done, construction is happening, but this is also a very challenging time to be a landlord, not to mention a very challenging time to be a tenant. And so then I'll wrap with a couple of reflections on what kind of projects are needed for a more robust and resilient recovery. And the most important thing as I see it, which really has been the most important thing even before COVID, but is all the more to the front now, is projects that can generate jobs, which principally means projects that are operating business investments, less principally real estate investments. Real estate investments often substitute one investment for another. This grocery store opens, but that means that one goes out of business. It's not a one-for-one, but it is the case when we look at the economics of real estate investments. They're less additive to local economies. And so we're really interested in OZ type investments that are not just moving a building across the street from where it would have been, but really adding new economic activity where it wasn't there previously, most notably through job creation and business formation. And so that also means, especially, and this was true pre-COVID and it's true post-COVID and it's true post-COVID recovery, but really pushing much more into communities that are truly lacking from investment. And that is true for certainly many of the zones, though not all of them. And so that's really the place where if we need to emphasize going forward, we need to double down in those communities in particular. Thanks.
Fantastic. Thank you, Brett. Thanks for joining us today. Egils, did you have any follow-up questions for Brett, or should we hold some questions until the end here?
No, I'd go ahead.
Okay, we'll proceed then. Again, as a reminder, we are going to have a Q&A session for all of our panelists at the conclusion day. We're going to try to wrap up by 3 p.m. Eastern time. Had a couple questions on that. So this is a 90-minute long webinar. We'll probably finish with the prepared remarks after about an hour or so. We'll leave about 20 minutes at the end for questions. So by the way, we did get Jim Sorenson in the room, and I'm going to bring him in a minute. But first, we've got our second panelist today is Emily Lavery. As a reminder, she's a legislative assistant to Senator Tim Scott, and she's one of the nation's leading Opportunity Zone policy experts. We're very pleased to have her with us today. Emily, how are you doing?
Good. You are far too kind to me in your introduction, but I appreciate it.
Absolutely. Well, Emily, I know you don't have any prepared remarks, but we've got some questions here. This panel is going to be a little bit different. I'll be throwing some questions at you. So, obviously today's panel is going to focus on COVID-19 and opportunity zones, both in terms of how opportunity zones can recover from the pandemic and how the incentive can help the nation recover as a whole, and particularly in those low-income areas that get hit so hard by these recessions. So, Emily, my first question for you is, how are opportunity zones faring during this uncertain and tumultuous time?
Yeah, absolutely. So I think Senator Scott said it best when he said that, opportunity zones continue to take off. Mike and his team over at Milbergs are actively tracking more than $75 billion in planned investments, which is incredible to see. In terms of anecdotal evidence, right, just in the last few weeks, Second Chance's Farm in Delaware secured a $1.5 million investment. A startup in Erie just received a $1.2 million investment. Launchpad, who does incredible stuff in the co-working and entrepreneurship spaces, is based in New Orleans, but will be opening its first location in Arizona shortly. So, as we talk about developing entrepreneurship specifically and giving rise to job creators and skill building entities, this is the kind of stuff that gets us really excited, and I know that Senator Scott gets really excited about as well. And of course, we also recently had the U.S. Conference of Mayors adopt a resolution affirming their support for opportunity zones. So it's been a good couple of weeks, even in the midst of the pandemic. Good.
Yeah, hopefully, obviously one of the catalysts for opportunity zones was that a lot of areas got left behind from the previous recession of now about 11, 12 years ago. We're hoping things can go a little bit differently this time around. We saw recently that the IRS issued key guidance to provide additional flexibility for opportunity zones in terms of pushing back some deadlines. Investors in many cases now have until the end of this year. The 180-day window's been kind of disregarded just because of what's happened here with the pandemic and our nation's response to it. That guidance came a few weeks after Senator Scott, your boss, had issued a letter to the Treasury Department requesting this relief. Could you give us some background on that guidance and specifically share how you think it will help to ensure that the OZ incentive continues?
Yeah, absolutely. And I mean, first and foremost, huge shout out to Treasury for getting that turned around in just 6 weeks. Similarly, EIG and Novogradac sent letters as well. And so we super appreciated that. Senator Scott pulled together a letter outlining 10 main requests for immediate relief for opportunity zones during the pandemic. He was joined by 9 members, 7 of which are Senate Finance Republicans. So it's always great to be able to see some committee support for opportunity zones where and when we can find it, especially now. And so Treasury turned that around in about 6 weeks, which is incredible, and we're super grateful. But yeah, in a nutshell, I think you kind of started to cover it, but again, the new guidance extends certain 180-day investment windows until the end of the year, gives folks more time to meet substantial improvement timelines, gives funds more time to invest, and ensures that funds, businesses, projects, community organizations, etc., are not held liable for circumstances beyond their control by allowing for a reasonable cause exception for the 90% asset test through the end of the year. So again, in our view, these are extremely common sense, fixes and solutions that needed to get done. And again, those were echoed in EIG and Novogradac's letters as well, in a number of places. Though of course there's always a bit of nuance. So again, that was huge to see that get done so quickly. And again, it's about providing that additional layer of flexibility during this time when again the markets are a little all over the place.
Right. Your boss, Senator Scott, he's been vocal for a while, and I've been hearing the same thing about needing certain legislative changes to the Opportunity Zone statute. In particular, a lot of the people that I talk to regularly really want that 2026 deadline pushed back at least a couple of years. I mean, that would do a couple of things. One, it would allow more time to harvest more capital gains and just push the sunsetting of the program back, a couple more years, but also would reopen that 7-year window to get that 15% basis step up, which I think is important. Is there a potential to get any legislative changes, and in particular that one, pushed through this year, do you think, Emily?
Yeah, well, I mean, in short, I would love to see that as well. Frankly, I think especially when you're taking into account the realities of the COVID-19 pandemic. I was laughing with a friend the other day, thinking about how in March we were thinking, there's no way this goes until July. And here we are in August. So as we talk about needing a 2-year timing extension, I don't think it's ever made more sense than it does right now. And similarly, EIG, who just had a really awesome national survey come out not long ago, that found that 64% of respondents said that having a timing extension of the 2026 window would make the incentive more effective tool for the recovery more broadly. So again, having that kind of data and those kinds of answers on the book for us to lean on is really helpful. But again, it's not only about providing more time to revive those benefits, but it's also addressing the realities that, again, opportunity zone implementation takes some time in certain localities and regions. And we want our community organizations and our local governments to have as much time as possible to reap the benefits and harvest the potential of the incentive.
Fantastic. Well, Emily, I want to make sure we have enough time for the rest of our panelists today. We're going to be continuing our discussion on our Opportunity Zones podcast interview coming up in a week or two here. So be on the lookout for that later this month, most likely. Egils, do you have any other questions for Emily, or should I move on?
Well, let me ask you, had we done the poll of our audience here to find out what the representation is?
We have not. I glossed over that. So thank you for reminding me about that. We do have 3 different poll questions for our attendees here today. Forgive me, Egils. I was supposed to throw this up here a little bit earlier. But I'd like to launch this first poll now before we do get to Jim Sorenson. And I've just put that up on the screen. We're just curious, what type of organization you represent, whether you're an individual investor or a family office or an Opportunity Zone fund. You can see all the other different options there. So we'll leave this open for about a minute here. And then really briefly, let's just, while we're waiting on those results to come in, Jim, hello. Can you just very briefly introduce yourself and let's make sure that you have screen sharing capabilities. If you can share your slide deck, we can start getting that going as well.
Great. It's great to be here, and I'm sorry for the delay, Jimmy. I'm here really to talk a little bit about Catalyst, which is an opportunity zone fund, our investment thesis and strategy, a little bit about our real world case study, and how we're striving to really drive deeper impact through our capital and through our financial models and key partnerships with government, philanthropy, and nonprofits.
Fantastic.
It's great to be here with you today.
Fantastic. It's great to have you here with us here today, Jim. I think you missed my intro of you, but I did introduce you as an impact investing pioneer, and I sincerely mean that. So we are looking forward to your presentation. Before we dive into your discussion today, I do want to end our first poll, and we have a pretty widespread audience, actually. The largest portion of the audience comes from service providers, different consultants, lawyers, and accountants, and other service providers with us today. We have a fair number of people representing entrepreneurs and small business owners, and a fair amount of nonprofits in the room as well. So really a pretty eclectic looking audience here today. Forgive me, I hadn't shared the poll results. There's the poll results. You can all see them there right now. I'm going to stop the sharing and I'll turn it back over to you, Jim, and thank you again for joining us today. Really do appreciate it.
Thank you. So a little bit about me. I'm a serial entrepreneur for most of my life. I've spent 2 decades as an impact investor. I founded the Sorenson Impact Foundation in 2012 and was quite involved in the passage of the Opportunity Zone legislation. I formed Catalyst Opportunity Fund to be an example for transformative impact investing. Our current funds are focused exclusively on real estate, but we do plan to do businesses later. We partner with best-in-class developers, community stakeholders, and focus on overlooked markets that are usually off the coast. Intentionality and collaboration are key to generating competitive financial returns alongside measurable social impact, and that's really our goal. Our strategy really involves finding opportunities in 4 key impact categories. The first is housing affordability, and that's along a spectrum of deeply affordable to workforce housing. The second is economic development, which really involves business incubators, accelerators. Launchpad was mentioned. They're a great partner out there. The third category is really access to services. That's health clinics, charter schools, affordable grocery, and nonprofit wraparound services where needed. And then finally, environmental sustainability. We really focus on net zero development and adaptive reuse. Our markets are initially in the secondary and tertiary markets that are off the coast. And these are examples of where we're at. And our in-depth analysis of these markets suggests an encouraging early resilience to COVID-19 impacts. A hallmark of our strategy, our investment strategy, is our impact scorecard. We take impact measurement seriously, and intentionality is a big part of that. So we do a community needs assessment up front. We then utilize the scorecard that you see in helping us to underwrite the factors such as the commitment of development partners to impact, community engagement, housing affordability, what is needed, social inclusion, how can that be generated, access to services, economic development, and sustainability. And then we have a post-investment dashboard of over 20 data sets that we collect and measure and report these impact metrics over the life of the investments. Financial innovation in the form of blended capital stacks is a key framework for moving beyond traditional real estate development into deeper impact in opportunity zones. And that really involves project level blending of market rate seeking return from Catalyst with public subsidy, philanthropy, and impact capital. I will give you some examples of these and actual projects now that we have done. The first is an adaptive reuse of a turn of the 19th century iron foundry. The capital stack here involves grants for business incubators, CRA concessionary debt, and city participation in the funding. The social impact is really a best of class business incubator that involves a coding bootcamp tenant, flexible office makerspace, and collaborative services to help in economic development. The next is a mixed use project. This is in Minneapolis. It's a blended capital stack, again, of innovative approach to financing that involves state grants and also local environmental remediation support. The social impact is really, I think, access to services, an immigrant-focused charter school, and really the environmental improvement of this very distressed area. The third case study involves, again, a blended capital stack. And here you have a health system, a local health system that is providing concessionary capital, 2% money. There is a city land grant, CRA bank, which is debt, which is also on concessionary terms. This enables really deeper impact with really low rates for nonprofit wraparound services and providers and community programming. And then finally, an adaptive reuse of an 80-year-old granary building. And this utilizes LIHTC, historic tax credits, and CRA debt on concessionary terms in the capital stack. And again, it really enables, through this collaborative, innovative approach to finance, a social impact for refugees-focused workforce training, low-income housing, and space for community program and wraparound services. So I think these are really great examples of the type of investing and intentional approach that Catalyst has taken. And I think it's this collaborative effort, working with communities, understanding what the needs are, being long-term in your outlook, and systematic in your investment that's going to ultimately transform over the long term these distressed communities to more vibrant communities.
Fantastic. Thank you very much, Jim. Egils, I don't know if you have any follow-up questions for Jim there. Yeah. Otherwise, we can move on.
Yeah, so I have a question. So it looks like Catalyst puts in a small amount of equity into this capital stack that you talk about. What kind of difference is the equity investment make to the overall value of the project and its potential return, the way you look at it?
Right. Well, I think, first of all, we take a very, again, collaborative approach with the developers. We seek developers that share our ethos, that have track records in communities that have been successful, that are working with local and state government to begin with, and share the vision of really the impact that we want to achieve. I think that approach and effort really enables us to add value in the programming of the space. We have relationships with national grocers, with health systems, with nonprofits, workforce development, so forth, that we can bring as tenants and participants in the area. So, you know, there's value from that standpoint. Certainly the capital is necessary and is, you know, going to be needed, and that patient capital is enabled by the Opportunity Zone legislation and the alignment of investors to invest in that manner.
Right. So the other related question is regarding projects you're looking at. What kind of asset appreciation are you looking for in projects that you invest in? That's one of the questions from one of the attendees.
Right. So we generally measure that in internal rate of return over the 10-year life. you know, that takes into account the income that's coming during the period of the cash on cash yield each year. You know, and we're targeting, you know, 9 to 11% on these investments. That's before the tax incentive. And we have a fairly conservative underwriting process. So, you know, we feel confident in being able to meet those returns. I don't know if that answers your question there, but that's typically what we're looking at. On a mom basis, that's usually, you know, about a 2.5x on the investment.
Yeah, thanks.
Fantastic.
Jimmy,
All right. Well,
go ahead.
yeah, thank you, Jim, and thanks, Egils, for providing the questions. I think we've got some more questions for you at the end, Jim, but let's we're going to move on to our next panelist, and then I'll throw up poll question number 2. So our next panelist is Dustin Lester. He's joining us today from Community Insights at Emsi. He is the Vice President of Consulting there. Dustin, I believe you have a slide deck you'd like to share too. So if you can queue up your screen share and let me know if you have any problems with that, but please do take it away.
Okay. Thank you. All right. Everybody see my presentation here?
I do. That looks good, Dustin.
Excellent.
Perfect.
Excellent. Well, I want to start by saying thanks again. It's really a pleasure and an incredible opportunity to speak with you today. You know, this is an important topic, and really want to demonstrate today how data can help tell your opportunity zone story and connect to the recovery. And it's to tell your opportunity zone story to fit with your strategy and to position your opportunity zones for success. And so, you know, there are, Emsi, we're a data and analytics company. You know, that is our specialty. And being the Vice President of Consulting, what I do is I apply Emsi's specialization in providing modeling, labor market information, and industry analytics, and applying that to solutions for economic development, workforce development, and, you know, community resiliency. And, you know, it's an important thing to marry the two. I've been an economic development practitioner, working live economic development projects, been on a workforce development board. And, you know, from that experience, the most important tool that I had in working with businesses and with the community is data. And so I'm so proud to have the ability to, in this role now, to lead a team of consultants to apply Emsi data, other data too, third-party data, and then work with communities to provide solutions. And opportunity zones is no different from our typical work. So a little bit more about Emsi. Emsi's mission is to use labor market data to inform and connect people, education, and employers. That's our core mission. That's the work we do on a daily basis. We provide labor market and economic data, job postings data, profile and resume data, and Emsi skills. And there's so much here to unpack, but the big picture here is we can really work with communities from national level to states, MSAs, counties, down to the local level, to really tell that story, down to the census tract level. Obviously, that's a big part of why we're here today, is you know, connecting that data to the census tract level for opportunity zones, but really to understand what the workforce dynamics are in those communities, and what industries and what the demographics are, and then how to apply this data. And then with our Emsi skills data, we're starting to look, you know, why this is so important, not only for Emsi, but for many communities. And I've heard other panelists today talk about skills. Skills cuts across rigid SOC codes. SOC codes are standard occupation codes. Very important to understand the labor market landscape. But sometimes it doesn't always tell the complete story. You may have you may have two workers, one that works for a financial institution and one maybe for a particular software development company, and they may fall under the same SOC code, occupation code, but their skills may be completely different, and the skills required of their employers and communities, the demand from on the community side may be completely different. So that's why Emsi has invested a tremendous amount of our work to not only focus our attention on labor market information in a traditional way, but also adding that dynamic of skills and what that means for communities. So a big thing about opportunity zones, a big thing that we're understanding is that there's this inaccurate tendency to treat opportunity zones as the same type of geography. They are all different. You know, there are urban opportunity zones, rural opportunity zones, suburban opportunity zones, and so they should be treated different because there's so many variables that are impacting their performance as these tools to advance economic opportunity in their communities. And so the best way, really one of the only ways to assess the conditions and marketability of an opportunity zone for your community is through data. And there are various different types of data that can be applied here. And I list some here: labor market information, industry analytics, what we really thrive on here at Emsi, business intelligence, real estate data, obviously very, very relevant. Complementary tools and incentives. What's the community's package of resources to really tell that story? And then qualitative data. That's something that could be easily missed in really telling the story of what's going on in an opportunity zone. It's so important to ground truth, to get into the community, have conversations with your residents, your businesses, your stakeholders, and understand applying that objective, quantitative data with the individuals who live and work in opportunity zones. So a little bit about how Emsi, our data, and how it can directly impact and help an opportunity zone analysis. We have census tract data, which is great. We have demographic data, which is available. Because of a small limitation is that there's a little bit of lag in data. Our data and other model data uses government sources, and so those government sources can have a few month lag. So this data is available now, but the first true round of COVID-19 data is available in early October. Same with industry data. Very important to understand. And what's really special about our data is it's down to the 6-digit NAICS code level. So it gets very specific about what type of industries are in an opportunity zone. Once again, the first round of COVID-19 data this fall. Emsi is in the process of modeling occupation data down at the census tract level. So this is in development. We're hoping that this will be available sometime this year. And then business listings data. This is very important to understand. Who are the existing business? What's the existing business community? Who are those businesses in the community, and what are those opportunities to work with those businesses to expand investment in an opportunity zone? There's also additional Emsi data that's available at a higher geography at the county or MSA level, but I want to stress that that data can also be applied at the opportunity zone level. Just because it's not modeled confined at the census tract level doesn't mean it can't be applicable and relevant to census tracts and opportunity zones. And we have some broader sets of labor market information, educational data, understanding the labor shed. Obviously, not everybody who works in an opportunity zone lives in the opportunity zone, and vice versa. Not everybody who lives works there. So it's good to apply a broader regional labor shed to opportunity zone analysis. Supply chain, it's great to understand what those gaps are in a regional industry supply chain, and then understanding those gaps can be applied at the opportunity zone level. So that could be a good opportunity for an entrepreneur to be successful and come in and fill a market gap. And then, of course, I mentioned our Emsi skills data. I have two examples. I wanted to demonstrate how we could, there are so many different stories and different data stories to tell in working with investors and developing a prospectus or working with existing businesses. But I picked San Antonio as an MSA to look at an urban example in Bexar County and a rural example in Atascosa County to demonstrate just some differences in the numbers and what might be relevant for a community, and how data can be applied to really dig in deep and get dynamic with the story you want to tell about your opportunity zone. So a quick example in Bexar County, which is, if you're seeing the map here, it's right here, virtually right in the center of San Antonio. I saw the numbers on, compiled I aggregated the numbers on IT related industries, 170 jobs, financial services, 219, restaurants, obviously very hard hit with COVID-19. So it's good to understand what kind of pre-COVID-19 numbers. Once again, that's what we're dealing with right now. And then demographics. We can dive really deep into the demographics. It's very important as you're looking at issues of equity and looking at opportunities in the community. So it's good to understand what the demographic makeup is of a community, and so we can do that down to the census tract level. So this is that one opportunity zone in Bexar County, and then a rural example. In this county, natural resource energy related jobs were very large, 352 for a county. This is one opportunity zone in a county of not even 50,000 people. Small number of manufacturing jobs, and then I think sometimes it's easy to forget. Actually, education and local government. Government jobs can really be a big base of employment for some communities. So once again, part of the analysis, and then once again the demographics for Atascosa County on the rural end. And then I want to wrap up. A question?
No, sorry, Dustin. I was going to just gently urge you to wrap it up if you could.
Yeah. Thank you. Absolutely. Thank you. And so one thing that we're doing at Emsi is since we have a bit of a data lag, we want to combine real-time data with our labor market data and also COVID-19 data. So we have actually released the Emsi reemployment data. This is the Atlanta example. I'll just quickly click through here, but it really, it provides some great data that's combining COVID-19 statistics real time with workplace and economic development data. So you're looking at industry postings, company postings, who's posting the most, who's posting the least, what careers are trending and not trending. So I want to thank you so much for the opportunity, and happy to answer any follow-up questions.
Fantastic. Thank you, Dustin. Really appreciate it. A lot of great data that your organization provides there. We're going to move on to, we've got two more panelists today, and then Egils is going to give some closing remarks before we move on to the Q&A. We've got a lot of great questions. We've got a huge stack of questions in our Q&A there, and I really appreciate all the attendees for giving us a lot of great questions. Before we do move on, Catherine Lyons will be up next. I do want to launch our second poll question of the day here today, and it is: what are the most important investment areas for the recovery of opportunity zones in your mind? And this is multiple choice. You can choose up to 3. So have a look at that and identify, if you could, the areas that you feel are the most important. And again, you can select up to 3 different answers there. I'll leave that up on the screen for a minute or two while Catherine gets going. Catherine, I do believe you have a slide deck, so if you'd like to begin sharing your screen while we've got the poll question up, that's just to make sure we're all right there and good to go. And just to remind everyone who Catherine is Manager of Policy and Coalitions at the Economic Innovation Group, or you may know them as EIG. They're the research group in Washington, D.C. that really spearheaded the Opportunity Zones initiative and created the legislation in the first place. So we're going to wrap up this poll question here now. I've got a lot of people rushing in here the last few minutes here. I'm seeing it in real time. I'm going to go ahead and end the poll, and then we will share the results here. And it looks like a majority of you said that affordable and workforce housing is the most important investment area. I can't say I disagree with that. Nearly a majority of you, about 46%, said entrepreneurship and startups. And then let's see which one came in third place here. It looks like education and childcare, or excuse me, workforce training actually edged out education and childcare. You can scroll through and see those results. So thank you all for participating in that last poll question. I've got one more, which I'll throw up toward the end here. But before we do that, we'll get to our last few panelists. We'll start with Catherine Lyons. Please take it away.
Great. Well, thank you again for having me. It's really great to be here among such an esteemed group. I will try not to repeat what what's already been discussed by several of my fellow panelists, but I'll start with just giving kind of a brief overview of where we were at the beginning of this year, kind of pre-pandemic. I'll go into a little bit more detail of the survey that Emily mentioned post-pandemic and so its impact on opportunity zones in the market. And I'll end with a few examples that we are seeing actually kind of post-pandemic that are continuing on with a particular emphasis on deals into operating businesses, since that's been also a point of conversation and one that we think is going to be really important for a robust recovery. So I'll start by just probably going through what everyone already knows here. We entered the beginning of 2020 with actually quite a bit of clarity. Finally, we got final regulations that had been in the works for about 2 years. We also saw the expiration of the 7-year tax benefit at the end of last year, which really led to an uptick in investment before the end of 2019, at the start of 2020. As Senator Scott said at the top of this webinar, Novogradac has estimated as of April 2020 that more than $10 billion has been raised. But then, of course, we entered a period of great uncertainty with the onset of the COVID-19 pandemic. So, in response to that, a lot of the questions we received was, how is this impacting the market? And so we wanted to get a better sense of that from practitioners actually on the ground. And so we hosted a survey in May of this year with about 108 survey respondents. 42% of those were fund managers, but it also included responses from service providers across the spectrum, project sponsors, capital providers, and some of those community leaders who are leading the strategy and efforts in particular cities and their work on opportunity zones. So I've just included a couple of the highlights here, but certainly there's more information on our website where you can really dig into some of the results. But as you can see here, in terms of investor behavior, which I think is the most common question that we received about how that was impacted by the onset of the pandemic and the economic disruption that it caused, 71% of prospective investors remain interested, even if they were currently hesitant to commit. And we did hear that some were waiting for a bit more stability to come into the market to get a better sense of, how long this crisis would be, how it was continuing to unfold. Again, this was kind of around the Memorial Day weekend timeframe that we conducted the survey. So obviously it's a point in time kind of situation, and things are certainly shifting and continue to shift, from there. Also of note, this was conducted before the guidance that IRS and Treasury put out that we've discussed earlier. That did provide some additional flexibility around timelines and other requirements of opportunity funds and investors, which was obviously hugely helpful, in providing a little bit more certainty there as well. What we saw also is that 48% of investors said that they're looking to place capital, and while only 24% said that they're not going to pursue OZ investments, at least at that point. Since we have Emily and other policymakers here on the call and participating, I did want to also call out that there is a clear case for policymakers here as well. And of course, we're working closely with their offices on some of these initiatives too. A lot of the respondents said that, how they see opportunity zones as a tool for recovery is at least in part dependent on the actions of policymakers, and particularly, as Emily already mentioned, a majority of respondents said that extending that deferral beyond 2026 would be incredibly helpful to some of their work. You can see here some of the other types of policies that also had support, including new tax benefits and funding local capacity building, which I think is incredibly important, especially now in the wake of this too. I won't go through this in great detail since we've already discussed it, but again, this, EIG was involved in asking IRS for additional guidance and flexibility. They responded, I think answered nearly all of the recommendations that we provided, and many of the ones that Senator Scott asked for as well. So again, this really did provide some great assistance to investors to continue on in their investments. And I think, you know, a lot of investors that we've talked to, both through the survey and outside of that, have said that the patient capital that Opportunity Zones really incents, and, you know, the 10-year hold period through which you get the best or the kind of most lucrative benefit, certainly makes this an incentive that is possibly kind of well-timed for, or well-suited to, I think, the moment that we're in. So I'll close out with just a few examples of investments that are ongoing. And again, you'll see here by the dates that many of them are actually, were either in process or continued even post-pandemic. And so this is a real focus to, I kind of picked certain projects that really highlight the investments that we're starting to see into operating businesses. The regulations were hugely helpful to providing clarity for both communities and investors to start to make these investments into operating businesses. I know that real estate certainly has seen the vast majority of, you know, deals currently are into real estate, but that is at least in part a function of the regulations as well. And so I think that we're really starting to see an uptick in the part of the market focused on operating businesses. So for example, and I think I want to point out a couple of things too, a couple of trends really in that co-working and accelerator spaces are really playing an important role here in the kind of community ecosystem building here around operating businesses and funneling investments into qualifying businesses in these opportunity zones. So we're seeing that when Warren, Ohio, Bright Energy Innovators announced 2 of its portfolio companies would receive opportunity zones investments. I know Launchpad's been mentioned, I think, twice already, so I'll go ahead and mention them a third time for good measure. And that Mesa, Arizona deal that was just announced last month is a great example of really a cornerstone of community revitalization for Mesa. And also, of course, they as a business are also receiving you know, Series A funding through that deal and co-locating into the Caliber commercial real estate opportunity zone deal as well. And so again, I think a really great kind of example of some of that balance. I know I'm probably running up on time, so I will close out quickly here. One I just wanted to note, because I think it's particularly well suited again for this time, is that in Chicago, Illinois, Verte OZ Fund is connecting underrepresented job seekers to a broader network of opportunities. And so they've created a company, they're invested in a company there that will again, help job seekers find new employment in this time. We actually have an investments page that lists, I believe, all of these investments are part of that. So you can dig into this a little bit more on our website as well. The last one I'll mention, just because it's a personal favorite as a former journalist, in Brookville, Indiana, a case study actually that LISC did, the CDFI there, or the National CDFI did a case study on this. Residents who sold a business and had capital gains invested in a few different areas in real estate, but also in buying their local newspaper, which is one of the oldest newspapers in the state of Indiana. And they have kind of revitalized that and breathed new life into that publication. So again, that made possible, at least in part, through the Opportunity Zones incentive. I'll close out with a couple of resources there. Definitely recommend taking a look at some of the activity map and investment highlights, where we are aiming to track some of this information and the latest investments, funds, and initiatives across the country.
Fantastic. Thank you, Catherine. That was great. I love all those case studies that you have. Is there anywhere where we could go to find that full list? Is that on your website? Where can we go to find that?
The investment highlights. So if you go to eig.org/opportunity zones, there is a great kind of set of resources there. One of the latest we just rolled out was that investment highlights by category. So you can actually search by the different categories of investment type there.
Okay, great. Yeah, a lot of those were familiar to me personally, but a few I hadn't seen before. So I'm going to take a look at that as soon as I can. Thanks for sharing that. That's fantastic.
Yeah. Absolutely. Thanks for having us.
Good. So we're going to get to our final panelists here today. Last but not least is Robert Scott. He joins us from the Small Business Administration. He's the Regional Administrator for the Great Lakes region. Robert, I think you said you did have a slide deck, but you might just wing it. So up to you what you want to do here. Go ahead.
Yeah, absolutely. I'll show it here in a second, but Catherine brought up a very good point. My region, as the regional administrator, actually includes the state of Indiana, Ohio, Michigan, Illinois, Wisconsin, and Minnesota. And I've actually personally been to Brookville, Indiana, and met the gentleman that created that Opportunity Zone Fund and turned around and bought the real estate and bought that newspaper. And actually it's 2 newspapers. It's one of the very few newspapers that produces a Republican newspaper and a Democrat newspaper. And it goes besides, like in the olden days when the big dailies used to do that. So it's actually a fascinating story. This town is about 45 minutes outside of Cincinnati. And it's kind of northwest of Cincinnati, kind of in the middle of nowhere, but they have a large man-made lake and a little cute rural downtown. And it's one of the poorest counties in the state of Indiana. This gentleman sold a manufacturing company in Cincinnati. He's from Brookville, Indiana, and decided to create this Opportunity Zone Fund and do a lot of good in his hometown. So it's a fascinating story. Highly encourage anyone on listening today to certainly look at that. I also have another cool example outside of Chicago, in the south side of Chicago, where a woman decided to use the Opportunity Zone area and use SBA resources, a Small Business Administration resources, and she bought a building and totally rehabbed it. I actually toured that building a couple weeks ago. Fascinating story where she builds landscapes on top of buildings, green spaces that go on top that serve as like a protector barrier for the roof. Another fascinating story. They're called Omni Ecosystems, if anyone wants to do it. So, but I will shut up and show my slide deck because I'm probably running tight on time, and for some reason it's not working for me. So I'm just going to wing it. So the great thing about the U.S. Small Business Administration, and if you didn't hear about us before the pandemic, you definitely know us now, because we are the tip of the spear when it comes to the economic recovery during the COVID-19 pandemic. Obviously, most of you have probably heard of the PPP loan or the Economic Injury Disaster Loan, or EIDL for short. That's kind of been our thing the past 4 months. I've lived it, breathed it, and actually this is the very first webinar I've done that wasn't related to that specifically. So happy to talk about something new. But just for all your listeners' knowledge, the PPP, we will stop taking applications for that on August 8th. So if you want it, go to sba.gov to research it and certainly apply. But the great thing about the Small Business Administration is we've been engaged with the Opportunity Zone program since President Trump signed it into law. We are actually one of the leaders within the White House Entrepreneur Development Initiative and leading the entrepreneur track. And why do you think that is? Well, the sole purpose of the U.S. Small Business Administration is to help create, support, and expand small business. That's why we were created in 1953. It's what we're doing now. Now we're saving businesses, certainly during the pandemic. But it kind of intersects with the Opportunity Zone areas, because we have focused a lot of our attention in those areas in the country that need some uplifting, and certainly these OZs were selected because of that they needed a kick to help them, and certainly government, all partnering together to do it, and helping support, one, the small businesses that are already located in the OZs, but also helping businesses, if they want to locate in the OZs, to take advantage of, obviously, the tax benefits that are there. We're there to help. And then finally, obviously, the use of OZ funds to start businesses within the Opportunity Zone area. Probably one of the coolest examples I have of this actually in practice is in Canton, Ohio. Most people are like, what's in Canton, Ohio, except for one thing, the National Football Hall of Fame. It's kind of like the staple for Canton, Ohio. I've personally been there several times. I'm a native Buckeye. But people that come to Canton, Ohio, they only stop and go to the Football Hall of Fame and then they're out of Dodge. They go to Cleveland or Akron or somewhere closer where there's nicer hotels and nicer amenities. Well, the county, along with the city of Canton, along with the National Football Hall of Fame, along with the NFL, decided, you know what, we need to make this a destination. And they kind of came together and created an Opportunity Zone Fund, and everyone put money into the fund to start, one, redeveloping the area, but attracting small business. So what's happening now is there's a ton of small business owners that are, from the area that are now buying land, building high-end hotels. There's going to be a Top Golf that's built that's kind of centered around football, not necessarily golf, but a simulated football playing, along with all the other restaurants and all of these are small business owners in the area that are taking advantage of the Opportunity Zone program. Along with that, they're taking advantage of the U.S. Small Business Administration's programs, whether it be free counseling, our lending programs such as the 504 loan or the 7A loan that are still here. They're not gone just because of the pandemic, but they're tapping into us as well as a government guaranteed lending program to assist them in buying a building, buying land, or whatever it may be. When you work with the SBA and you're working with a lender, it helps that Opportunity Zone Fund manager feel a little better because the U.S. government, though we're not perfect with these government guaranteed loans, if you're getting backed by the government, it gives those investors, it gives that Opportunity Zone Fund manager a little more safety net, saying, oh, well, they've got some skin in the game. The government has guaranteed their loan, whether it be that parcel of real estate or that building or the business or whatever it may be. We're there to certainly assist you. I know I'm running tight on time, so I didn't want to go, but you can read about us and all of the services that we provide at sba.gov. Again, I'll say that again, sba.gov. We have district offices, 68 of them across the country. Feel free to tap into us. What I always like to tell everyone is, you know what, we're free. You might as well utilize us. But it is prepaid. You pay your taxes, so we're prepaid services, but we don't pay any additional fees. So feel free to use it. Again, sba.gov.
That's great. All right. Well, thank you, Robert. SBA, a lot of great resources, absolutely, for small business owners. We're going to move on to our final poll and our Q&A here in just a minute. It looks like we're doing good on time, Egils. We're going to have at least 15 or 20 minutes for some Q&A here. Egils, I know you wanted to say a few remarks before we move on, so please go ahead.
Well, I'm ready to jump into the questions. And why don't you stick up the poll and we'll look at it in a few minutes, and then let me ask a few questions so we can get to
Fantastic. Yeah, we'll get rolling on the Q&A here in a minute. I just did share that final poll question asking all of our attendees here today, which of the following best describes your outlook for Opportunity Zone Fund investing? And then I've got several choices there. I'll give you a minute to read through that. We've got a lot of great questions that have come in. We have tried to answer some of them by just typing in answers. I see that Jim and Emily and I have gotten to some of these questions and gotten some of them answered. Egils answered one or two questions here. If any of our other panelists want to open up that Q&A and either flag them for me to address to you verbally, or if you want to type in an answer, please feel free. I do not think we're going to get all these questions answered today, unfortunately, but Egils and I will have a record of them, and we'll try to get answers to your question as soon as we can if we don't answer them here live today. So I'm going to wrap up this poll question now so we can see what everybody thinks the outlook is for Opportunity Zone investing. Ending the poll now and sharing the results. So plurality, about a little more than a third of you say that you're cautiously optimistic in evaluating projects. A good portion of you, about a quarter of you, think that more improvements need to be made to the legislation and or the regulations from the IRS. And then a fair amount of you also believe that that there are some highly attractive Opportunity Zone investments available today. A fair portion of you also said the pipeline of investable projects is extremely limited. So really, we've got a lot of different viewpoints here. very few of you said that you were skeptical that OZs will deliver sufficient investor returns, although I do know that that was one of the main theses of Brett Theodos's research report that came out, that he believes and his group believes that the investor returns may not be sufficient enough. And we may get to some more of that during the Q&A discussion here today. So Egils, I think we're ready to move on to the Q&A now. Is that correct?
Yeah, let's go ahead. So let me ask a couple of questions to the panel here that came through the Q&A. One is a data question regarding what are the best sources for Oz funding and the types of projects that are being invested in. More specifically, is there good data on what happened to Oz funding during the COVID crisis, I guess starting late January, early February till now? Does anyone can anyone point us to where the best data sources on that?
Probably Dustin or Catherine might be best poised to answer that question, I would imagine, if either of you have any insight into that.
Yeah.
Jim's raising his hand. Jim, if you want to go ahead, if you need to unmute yourself first, and then you can give your response there. Go ahead.
Oh, Catherine, I think probably has some pretty good insights, but I know that Novogradac has been keeping a pretty good database, and I think is pretty reliable on the information that they have. That they would be the ones that I would put out there. Catherine, do you have any ideas?
Yeah, thanks, Jim. Definitely agree that Novogradac probably has the most comprehensive opportunity fund directory, and that is the group that they survey with regularity, and where we've gotten some of the latest numbers in terms of OZ capital raised. I believe NCSHA, the National Council of State Housing Agencies, also has an opportunity fund directory, but I know there's a lot of overlap between that one and Novogradac. I'll also just use this as a slight segue, but plug for additional reporting legislation as well. I think it's really important that we establish a set of reporting so that we can actually dig into a lot of the data and assess the impact of this incentive on the communities that are designated as OZs. So I know, of course, Senator Scott introduced the Impact Act that Emily could speak to in greater detail. We've been supportive of that, and that I think is one particular area of improvement for the incentive that enjoys bipartisan support as well. So hopeful to see that implemented as well, and then that would be certainly the most comprehensive data source available.
Great. So I got another question. The 1031 exchange is limited. Will it make the opportunity zone incentive more attractive or more popular? Anyone? Anyone want to pick up on that one?
Well, I can give you my thought. I see 1031 exchange as another, tax motivated vehicle out there that potentially could compete with Opportunity Zone because it provides a way to defer, and you don't have to be investing in an Opportunity Zone. But I've not seen a combination of 1031 Opportunity Zone investing.
Okay. So another question that Martin had, he talked about that technology is being developed toward automation, which will replace human labor, and he also combines that with companies reevaluating their supply chains, like with China and other places. What do you think the impact of automation and the current reevaluation of supply chains might have on urban or rural opportunity zones? Open to anyone.
Yeah, so Senator Scott actually released a draft bill about 2 months ago called the Made in America Act, which actually designs an international tax benefit for onshoring and decoupling to an extent. And so it's really to drive actually manufacturers of pharmaceuticals and PPE to come back to the United States and bring those jobs with them and put them into opportunity zones. And again, that's just in its draft stage right now, but it's one that we're continuing to work through. Obviously, there's a lot of questions that will always remain in the international tax space. So we're taking our time to find the most appropriate path forward there, but it is an issue my boss has started working on.
You know, it seems to me a renaissance in manufacturing in this country might have a big benefit, particularly in rural areas, and bringing jobs back, well-paying jobs back into opportunity zones, it seems to me.
Yeah, I mean, well, we were certainly, you know, experiencing one 7 months ago. So it's, we're hopeful that we'll get back there.
Right, right. So let me ask you about broadband, anybody on this one. We're more and more in a virtual workspace, virtual education, et cetera. And according to data I've looked at, affordable broadband access is not all that great in opportunity zones. What's your view on what can be done to provide more access, affordable access to broadband services in opportunity zones, and what role maybe opportunity zone funds might be able to play? Anyone?
So I'll say that I know that there at least are several funds that are looking into using or starting opportunity funds with the express purpose of providing broadband in rural areas. I think they are often at early stages, at least that I'm aware of. So I don't have a lot of detail yet on how they're structuring their fund in order to provide that service. But I do know that that has caught the attention of several opportunity funds as a potential area of investment.
Mm-hmm.
And I would just add that I think opportunity zone incentive is well matched for investment into broadband, simply because it's capital intensive, it's place-based, and it really takes long-term patient capital. And so I think the incentive is well suited for that type of investing.
Okay, very good, very good. Got a question on, well, one question that came in, I'm not sure exactly, but it's, is there pushback happening on the Oz sunset extension? And are there any other ideas for expanding funding sources for opportunity zone funds, such as maybe a fund of funds for opportunity zone funds?
Yeah, so I guess I'll take that one. But yeah, of course, looking at expansions into fund to fund is of course something that we've been looking at. We've chatted with EIG and other stakeholders about that over the last year and a half. It was technically included, I believe, in one of the original base texts from years ago, or at least there was some level of flexibility that would have allowed for that. But that being said, beyond that, so we're absolutely working towards a 2-year timing extension. We do have a bipartisan reporting bill on the books and out there. We're continuing to work with our colleagues in the Senate to see what's going to be possible. Of course, you know, the last 5 or 6 months of policymaking have been totally dominated, of course, by CARES and phase 1, 2, and now 4, of course. And so, again, identifying that window is going to be really, really important for us, but we're continuing to push to get it done. And Cory Booker has been a fantastic teammate for my boss. It's been awesome to see Senator Sinema stepping up and taking a bigger role in opportunity zones, and of course, Van Hollen just this week. So we remain hopeful.
Right.
I would just add in addition there that I think the question is, what form does OZs get extended in? And are there any modifications that we want to make with the addition of time? And I think there's a variety of perspectives as to whether we just want to kind of carbon copy what we have right now and push it forward, or we want to take this moment to recognize ways that the program could be improved. And so whether that means removing zones that aren't a good fit, whether that means adding extra incentive for certain eligible activities, whether that means removing certain eligible activities, certainly reporting, but also even more structural or deeper changes about how we can really help the incentive work better to achieve the goals that it is intended to achieve.
Right, right, very good.
If you don't mind me taking a couple here, Egils, I've got a question here from an anonymous attendee. It says there is clear intention from the Democratic Congress that they want to eliminate this program. Will this program actually exist in 2021 should there be a change in the White House / Senate and the Dems retain Congress. Of note is sorry, I'll chime in, Emily, and then I'll get to you next. Of note is the presidential candidate Joe Biden actually came out with some material on opportunity zones, and it appears that he has no intention of eliminating the program. He does want to reform it, and I think a lot of his ideas in there to reform it are really good ones. He wants to reform it and regulate a little bit more, and I would encourage you to read what he has on his website. He just came out with this stuff last week, so I don't think anybody should be worried about this program going away. And Emily, I don't know if you have any more to chime in there.
No, absolutely. I would just echo those sentiments for sure. You know, Senator Booker remains really committed. Again, I think Biden's decision last week to come out and vocally support opportunity zones. First of all, I don't know that there was any pressure applied to his campaign to do that. So again, it seems very organic. And again, we're thrilled to see additional support. Sinema's been a fantastic partner in the House side. You know, we always work with Kind and Kelly together as a great bipartisan duo. And again, you know, we have folks reaching out to us all the time. There's just so much happening within opportunity zones. And of course, the Conference of Mayors putting out their bipartisan resolution in support of opportunity zones last week was really awesome too. So we're really pleased to see what we're seeing, especially during this time. So.
Great. And Brett, I want to bring you back in. Somebody addressed a question directly to you. We'll pose it to you first, and then if anybody else wants to chime in, that's fine. Brett, do you believe that any new investment into opportunity zones will include local businesses or developers from the opportunity zone?
Certainly some will. Whether it's the preponderance or even a material proportion, I would say is not entirely likely, in part because you just look at who is eligible to take advantage of the capital gains deferrals, exemptions. You know, most gains are held by the top, you know, very small sliver of the income and wealth spectrum. And so when you look at zones, you know, the incomes are definitively lower, and the thought of being able to have enough gains to not need them for 10 years, you got to have a lot of gains if you're going to lock them up for 10 years. So we're talking about a fairly narrow tranche. I mean, it's worth acknowledging that's not unique to this program. It's not like the low-income housing tax credit produces a lot of indigenous local investment from communities. That said, there are things that could be changed about this program that we've lifted up to produce a more, what I might refer to as a more democratic economy, which allows people to invest in their local communities, whether that's through a more refundable means of a tax credit or otherwise. But there are local developers in many communities. They may not be residents of the zone, but they may be local to the economy. So we'll see that. The investor side is a lot harder though.
Right. Good answer. I don't know if anybody else has anything else to add to that or not. And if not,
well,
that's fine.
I would just say in our experience, most of the projects have a local investor, whether it is the developer or whether it's a philanthropic or CRA money that's focused locally, or even cities and local governments.
Good. All right. Well, thank you, Jim. Move on to the next question. Actually, this question's from Vicky, and it's for you, Jim. So I'm going to keep you on the microphone here. Does Catalyst invest in multifamily residential redevelopment in opportunity zones, or community redevelopment as a whole, as well as specific individual projects?
I would say all three.
Good. A nice, concise answer there. So I hope that answers the question. Let's see what else we have here in terms of questions that have been flagged here. I think we discussed this already a little bit, but it came up a minute ago. You know, is there any discussion of legislative changes to broaden investor eligibility? You know, I think I've heard some have had the idea that, you know, if there's a small business that's located in an opportunity zone, why not allow regular investor dollars to flow into those investments, into those businesses to help capitalize them? Does it have to be capital gains dollars? Certainly, yes, it does have to be capital gains dollars under current statutory requirements. But Emily or anybody else, is there any push to be able to broaden that investor base?
Yeah, so it was definitely something that was also contemplated during tax reform, because again, we did see such significant changes in some of the sort of more nuanced rules within the original statute compared to what came through in tax reform. So obviously the issues of mixed funds and ordinary income and that treatment in terms of, especially if you're holding a 10-year benefit, why a mixed fund wouldn't get that same change. And again, you know, of course, scoring was a big part of TCJA and getting those numbers to function. But it's definitely something that we continue to have conversations with just a number of stakeholders on.
Good. Well, thank you for that. I don't know if anybody else has anything to add there. Egils, go ahead.
Well, listen, I think we're getting close to closing time. I thought I'd just make a few takeaways, if that's okay with you, Jimmy.
That's fine. Yeah. And I know we've got a lot of questions that were left unanswered, and we'll try to respond to you as soon as we can. But Egils, yeah, please do close us out here if you'd like.
Yeah, it was a great turnout, and we'll get to the other questions that we've gotten with some answers. So let me tell you what I think we've gotten out of this. Number one, the Oz incentive is a bipartisan success story, and it's going to continue, in my opinion. So all of the kind of uncertainties that are revolving around politics and a number of other things, I think are to be considered, but I think overall this program is going to have a chance to prove its value. But COVID has created, I think, a pause in how this program is going to move forward at the moment. There's a lot of dry powder, and people are holding back, I think, in order to see more clarity what's happening to the economy, what exactly is happening inside of opportunity zones, et cetera. But the story, I think, is mixed. I've been on the phone with a number of different Oz funds, and some of them are doing gangbuster business in certain parts of the country in which the projects, there's high demand for their projects, be they multifamily types of projects. I don't see much in hospitality. I see a lot in diversification starting to take place. And this is what's interesting, I think, right now in the evolution of this program. We're seeing projects in areas like entrepreneurship and accelerators and workforce training, childcare, education, broadband, all that. Pretty exciting that entrepreneurs as funders are interested in not just, if you will, real estate, multifamily, which is important, but other kinds of assets. The other thing that strikes me from the presentations is the leveraging of multiple sources of funding. I think Jim Sorenson put it best in terms of his capital stack, that in putting these projects together, one should use multiple programs. And I know the White House has got 160 different programs identified at the federal level that are supposed to align with the Oz incentive. I think we've barely scratched the surface on what those opportunities are to do that kind of integration. So, and finally, just data. I think there's a big opportunity for the data people, data mavens, to pull together some important data on opportunity zones, socioeconomic data, what's happening, healthcare, et cetera, as well as the impact measures that are necessary to. What we need is a set of success stories that are not just for investor return, but also for community impact. So I think there still is a challenge to educate the public and educate the political class that there are major benefits to this program if we give it a chance to grow. Anyway, I wanted to personally thank panelists and the audience for being here for this program. It was an honor to be a host.
All right. Well, thank you, Egils, and thank you for asking me to co-host with you and help moderate the panel. Thank you, everybody. We're at 3:00 Eastern time, so we're going to sign off. But thanks to our panelists again and for all of our attendees. Really appreciate your time. Thank you.
Thanks.
Thanks, guys.